Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful. Roll top wire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you guys buy it. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Oh man, we have so much to discuss today. I hope you're ready. Well, let's go to the charts. It's a day. It's a day. Look at the S&P 500, man. I mean, yesterday, pretty good bull run yesterday off of the open. Held it. But it was kind of a return to some levels from last week. And now here in the overnight, they're making another really big push. And the thing is there's not a whole lot of significant news or anything to really shake things up until the Federal Reserve meeting on May 4th, I think it is. And then, we got CPI and all that stuff. But so the next 2 weeks with the way that the gamma is positioned and everything, we could probably see some upside movement, especially in some of those most shorted stocks that were getting really, really hammered. So you can see that playing out, at least for the time being, in the S&P 500. Meanwhile, in the treasuries recovered significantly after that huge dismal move down that they had yesterday. So maybe a reprieve for the treasuries, although for us, scalping, I think it kind of makes today a little difficult. By the way, there is a 20-year auction, which has tended to be positive. Then we got oil. Oil just taking a huge hit yesterday and still just kind of going sideways. Same with natural gas. Natural gas took it. Really a lot of these hard commodities, right? Gold and silver down pretty big. Copper extending its downside movement. Probably, again, this being, well, there are some specific issues in copper. I guess there's always specific issues in copper. But then we also got, lockdowns in Shanghai and so forth. And then over here, I need the 6 day to come back. There we go. Then in the Bitcoins, we got, well, I mean, I've never seen it do this before where it's back and forth across the price like that. Like when I see it on my indicator, like my Buffett indicator for cryptocurrencies, it's weird. It's doing weird stuff I've never seen before. But if equities are going to rally here, probably cryptocurrencies go with it. So, and then we got the dollar coming back close to $100. So the dollar weakening here. Japanese yen recovering, etc. And in the equities markets, the biggest news that we got right now is that Netflix was the earnings. Oh my gosh, they were just dismal. It's a little hot in this room. I have to ban myself here. So there's all these stories yesterday about there too many people are sharing their passwords and they need to crack down on that, and they lost subscribers and it's really bad. And I'm calling it right now, folks. Bang is no more. It is now FAAG. Now that doesn't, I thought that if I said it, if we tried to stylize it, it would work. We're going to have to come up with a different acronym because that's just not going to work. That's just, social media is just not going to like that one. But Netflix, we're kicking them out. I'm calling it right now. We're kicking them out. We're kicking Netflix out of FANG. They're doing so terrible now. Well, a little bit of selling coming here into the treasuries. Though I do think that we probably will see quite a bit of two-way action. By the way, despite the huge recovery in the treasuries overnight, the 30-year is only 3 basis points off of 3%. So that is very, very curious to me. Well, Come over here to Twitter, make sure that we don't get anything changing. Volatilities are constant companions in financial markets time series. Peter Quell here explores market risk and optimal VAR adaptation and machine learning. Ooh, hey, that's one we're gonna want to read later. Quant Minds is a really great Twitter account to follow, guys. You want to get into machine learning stuff. About traders. Oh, Lloyd has been speaking this morning. In 1967, Florida granted special governance and tax status to Disney World. Maybe that was a bad policy. But to revoke it because Ron DeSantis objects to Disney's position on unregulated legislation smacks of government retaliation for exercising free speech. Bad luck. I actually agree with him there. The kind of that retaliation seems, I really hate the whole like, oh yeah, you do have free speech, but you're not free from consequences. And I mean, that is true, always going to be true to some extent. But I'm very much against, doing mean things to people just because they had an opinion. Do not agree with that. Oh, Goldman Sachs ends free lunch. Oh, that sucks. They have a great cafeteria too. Common knowledge versus common misconceptions in trading. Jigsaw 2 hours ago. That's good. We'll read that. Looks like Brannigan Barrett is picking up on the same thing that I'm seeing. This is a massive inflection point in the ESF and risk markets in general. Market sentiment currently very defensive, and there is significant cash on the sidelines. It's time to turn constructive and get with the flow. Bond yield retreat adds momentum to this thesis. I agree. I do not think that the fundamentals are getting better here, per se. There is still the geopolitical risks. Well, let's not even call it geopolitical. It's like the lockdowns in Shanghai, the war in Ukraine. Those two things. Those are the big risks right now, right? But are we really going to get like significant headlines that roil the markets off of that? I mean, we could, but it's unlikely. Or at least it seems unlikely at the moment. Knock on wood. Knock on wood. I'm sorry. I didn't say that. I didn't say any of that stuff. But I think that just the way that the market is structured right now, we're probably going to get a little bit of a rise. I don't know, maybe even a higher high, which would, and I think that what you're going to see is if we rise up here, it's going to have a significant effect on the market sentiment. So, Okay, well, I have a little bit to eat here. We still got other things to talk about, but let's just kind of watch. We're not seeing it quite as strong of an impetus in the treasuries off of the open as we have other days. So I think we're gonna have to be cautious. I'm kind of preferring a long though. So I guess we are getting some Canadian numbers on inflation right now, and the numbers haven't come out yet for some reason. Hmm. Man, look at all those price target cuts for Netflix by the analysts. Holy crap. Wells Fargo, Stifel, I don't know who they are. Atlantic Equities, JP Morgan, KGI, Piper Sandler, UBS, Pivotal, Bank of America all changed their rating. Jeez. I mean, they were down 25% yesterday. You think that there's going to be a further massacre, or you think that they're going to recover? Because it's rare that you see this. This is like a Nokia moment, right? This is like almost as bad as the Nokia thing, right? Where it was just like all of a sudden, one earnings, everybody realized that company was coming to an end. If they put commercials in, I'll cancel, dude, right? Well, here's what I'm wondering. They say that too many people are sharing their passwords. Well, and that they're going to cut down on that. Like how? Like it's already like you can only put so many devices on and stuff like that. So I'm not so sure I understand how they're going to enforce that. What was in the spike that you thought was significant? I don't think you're quite getting the moral of that story, Salim. Like the whole point of relating that signal to you was to show you an example of how you can get fooled by randomness, and that order flow signals tend to go through regime changes where the market will behave one way for a certain amount of time, and then it will switch and do the exact opposite. So when you're trying to trade purely off of order book signals, what you'll probably experience is a time period where you do really, really well. And then, like, as soon as you feel confident to put a ton of money on it, do a combine, whatever the deal is, the order flow signal like changes. So, what we had done was we were just looking at level 2 activity. And if we saw a spike in level 2 activity that was not accompanied by movement and actual orders hitting the market, we would look at that as perhaps spoofing or whatever, and we would look for a reversal of like 2 ticks or something like that. Right? And during the period that we had tested it, it was successful 60% of the time, but we didn't have a ton of samples. Okay. We had like 30 samples or something like that. And then when we went after that and we tried to use it after that, um, there was like huge drawdowns. It failed like 10 times in a row and all of a sudden was a terrible signal. Right? So the point is that the way that we as humans try to look at statistics, we are not capable, and our natural tendency is to look at too little data. We think, okay, I've done it for a month, that's sufficient. And the reality is that to really know what the performance of a signal is going to be like that, you have to look at it over the course of years. And when you look at those over the course of years, what you're going to realize is that markets are remarkably statistically efficient, right? But the spikes that we were getting probably could be a predictor or a precursor to liquidity holes, right? And that's the whole thing, is that our understanding of how liquidity behaves is much more sophisticated. And we've kind of developed a way of looking at that liquidity that is much more effective at telling you, how to adjust your trading. Doesn't necessarily tell you if it's going to go up or down or whatever the deal is, but it so far since we've been doing this for, I guess it's been kind of a year now. Although I feel like it's only been as of this more recent market, like the beginning of this year, maybe, where it really felt like I understand it, and the market was, you know, going where I was expecting, and I knew how to use it effectively, right? I've been making up to 450 trades a day that's a lot, dude. Well, if you're gonna scalp, doing lots of trades, that helps to see how consistent you are. You gotta remember the issue with the kind of thing that you're trying to do. If you're doing it well, you're probably going to make money most days. Like I would expect, or the goal would be like you have a winning day like 80% of the time or something. It's just that when you don't have a winning day, they could be really brutal, right? And then you beat yourself up over it, you lose the account or whatever the deal is. And so the challenge for that kind of a strategy is dealing with the bad days and limiting the bad days. And since they don't happen very often, you don't get very much practice, right? But that's the challenge, right? Everything is going to have a challenge, even if it really is like net profitable, right? But I have to say, like, anytime that we sit down and we say, I can look at the current data and predict with a certain expectancy what the market is going to do, it's never that simple, because the market is statistically efficient. Yeah, it would be better, but I think that, yeah, when you're talking about sample size, there's really two things that you should keep in mind, right? Number one is actually having different kinds of markets, right? Like the treasury market of the last 4 months is not the treasury market of last year, right? So if I have a strategy that has worked for the past 2 years in the treasuries, I'm a lot more interested in that, right? If it's been successful every month for the last 24 months, like I'm interested. I'm interested versus something that, worked last month, right? But then the other side of it is, how much kurtosis is there in your results? And the shorter term your trading is, the smaller your profits are, and the more variation there is between your winners and losers, or like your average profit and your maximum profit, those sorts of things create larger tails. The larger your tails are, the more data you're going to need. And especially for these strategies that are like, risk risk 16 ticks on the ES to make 8 ticks or 4 ticks sometimes, right? Those kinds of strategies have a huge amount of kurtosis or fat-tailedness in their daily returns. So you need a lot more data samples than people think. Like if a distribution is normal, okay? Your normal average distribution where the average tells you everything that you need to know, then you only need 30 to 50 data samples to have a statistically significant results, right? But the more kurtosis, the more fat-tailedness that you introduce into that distribution, the amount of samples that you need increases exponentially, right? So if I'm doing like a scalping strategy, like or like a high frequency trading strategy, when I'm backtesting, I shoot for 10,000. I shoot for 10,000 trades, right? Just because I have found that that's what it takes to really get something that you can prove is consistent. And even then, probably what's going to happen is you're going to look at those results and there's going to be significant downsides to it because it is such an extreme strategy. Properties about it that certainly don't match my own goals, right? So that's what the whole point of all that was, right? So he keeps asking me about that signal. I'm like, I would just ignore it. I don't think that it was what I thought it was when I originally did it. And that was the thing is that I had been told, oh, watch the signal for a month and track it and then turn around and try and trading it. And no, that doesn't work. That's there's a problem with that. It's not enough samples. I just wanted to understand the rationale behind it. Well, I think that was another problem with the strategy, really, right? Was that what I did was I created a bunch of data and then tried to formulate a trade off of the data that I had. And my general conclusion after having gone through that experiment and just doing a lot of back testing on strategies and things like that is that trying to formulate a strategy from the data like that tends not to work in trading because you're just never get a good sample. It's so hard to get a good data sample for the market. There's so much noise in it. There's just too much noise in it. And so you're better off using a proven how do I explain this? Like it, things that you know about the market that are proven, right? Like we know that trend following is a thing, right? So I was talking about this on Futures IO, and I think this is really interesting and could be really useful to a lot of people because we know that on higher time frames and especially in the commodities markets, that trend following is a thing. And that's how their turtle traders worked, right? Was that they were basically trend followers and they would take a bunch of trades, trade a bunch of times until they got one that ran for months and months and months and months, and that's where they made their money. Well, once you know it's like a trend following strategy, you can kind of know like what the properties of it are going to be, right? You're going to have something where like your average, where your largest winner is going to be several times what your average winner is, which means that there are large tails in it, right? So there's some problems with trend following, right? It's not a perfect strategy, and the whole thing is how do you deal with those, right? If there's this really huge kurtosis in your results, well, one of the things that you can do is you can reduce the kurtosis by implementing risk control rules, right? Limit your max daily loss, for instance, and that should improve your results. Yeah, and hopefully require less samples, because then the other problem is if you're gonna trade on a higher time frame, you know, I could go through and I might go on an instrument and go all the way back to 2008. So 16 years or whatever, and um, still get something that doesn't have enough samples, essentially, for me to really pull statistical significance out. So anything that I can do to reduce those tails is gonna help me running that kind of strategy, right? Mhm. I find when I talk about these things online, I always find it so effing frustrating, because there's so many people out there that have been taught things by other traders or supposed gurus that are just like flat out wrong, or that there's real problems with it. Even the some of the most authoritative people in our space, especially in futures trading, right? People that I absolutely respect and so forth, but I see them making these statistical mistakes. So that they're citing statistics to people without a consideration of what kind of a distribution they're looking at, and what the risk associated with that statistic is, and whether that statistic is actually generated by enough data, right? So I'm always feel like I'm fighting uphill, and it's like, well, Seth, you're not. How can you be so egotistical? You're not all that smart, but that's like exactly the problem, is that I'm a regular person. I've been doing this for a long time. I have a much more empirical and research based approach than pretty much anybody else out there public, right? But I'm not the smart guy coming up with this stuff, right? I'm following like the real smart guys, like Nassim Taleb and Jean Philippe, and like researchers that are being published in research journals and are working for firms and things like that, right? And I'm not that smart, but those guys are, and nobody else in the retail space is really implementing or taking the information that they have to heart. It's like you build up your empire, you get subscribers, and then you're done. You know, which kind of brings us to the other thing we got to talk about. Did you guys see the news about warrior trading? Was it 2 million? Wait. How much was it? I think it was a $2 million fine. No, $3 million fine. The Federal Trade Commission cracks down on warrior trading for misleading consumers with false investment promises. The investing company and its owner will pay $3 million in FTC case. Can you believe? I appreciate the work. I appreciate it too. I appreciate you guys, because we wouldn't have been able to find this stuff without you guys. We wouldn't have been able to really, take what we learned and turn it into something that's maybe useful without you guys. And it's a group effort, I am not in reality. In reality, I am not the main attraction of this channel. I mean, I would hope that I'm entertaining enough. um, that it keeps you around and so that you enjoy listening. But my conclusion after having done this for a very long time is that the format of what we're doing only appeals to a very small group of people. Right? So that is not the thing that is the real draw here. The real draw is the proven information that we share, and you guys all help in that, right? Anyways, I can't believe $3 million. But here's the crazy thing is that, well, here's what I don't understand. Um, from 2008 to 2021, the company made tens of millions of dollars selling its programs online. So this guy literally made $10 million over 3 years. Why is it that the FTC is hitting him now? Because what they're hitting him for, where can I find it here? In its online advertisements, where you're trading, exhorted consumers learn to trade with certainty towards financial freedom you've always wanted. Okay, so using the word certainty, that's certainly a no-no. Learn how I made over $101,000 in verified profits day trading part-time in under 45 days using 3 simple strategies that you can use immediately to increase profits and reduce losses now. That again, you're attaching a specific performance claim and then claiming that other people will be able to duplicate those results is certainly outside of the laws of the FTC. Start trading over my shoulder side by side with me because I guarantee, okay, so you use the word guarantee, that's bad, that next week, the week after, and the week after that, I'll be trading 1 or 2 stocks each day that move up 20 to 30%. Jeez. Right? So this is what he got hammered for. $3 million fine. That's relatively mild, isn't it? We certainly have seen other people on YouTube and elsewhere making far more extravagant claims and saying things that are much more out of line with reality, right? So I think that they probably went after him just because he was the largest and not necessarily because he was like the worst offender. But at the same time, you made tens of thousands of dollars. You're going to fine him $3 million. I wonder how much money does he have on hand? How much money does it require to keep that business going? Right? Because if your burn rate is too high, you could not have money on hand and $3 million could be the end of that business for them, right? Or if they keep in the money, $3 million is really just kind of a slap on the wrist, right? You fix up your marketing and you continue on. And at that point, does that really dissuade other gurus from doing the same sorts of things? I don't think it does. It's like, well, because if you're small enough, the FTC will never come after you. And even if they do come after you, it'll just be a tiny portion of what you actually made. You know what I mean? But it's a really, really big piece of news in the space. I hope that it changes the way that some people market, because it's really hard to get out good information when everybody else is running around making extravagant claims and breaking FTC laws. It's hard. You can't compete in that world. There's a decent amount of volume trading at 08. The move down, I'm gonna say, given the volatility as of recent, that's a decent down move. It is a little bit more than I thought maybe they would get on the downside. I'm still kind of thinking about taking one. I don't know. We'll see. I need to give it a little bit more time. Let's go out there and see it. So there wasn't much more here in our Discord. Let's go see on Reddit. I was reading the thread about it last night, but I didn't feel like there was too much conversation about it yet. This all came out like late last night, which the timing of it I also thought was kind of odd. "116 comments, huh?" Looks like that's all there is on Reddit about it, but there is more comments in this thread. But the top comment over here is, when are they going to take down Kramer and Rich Greenfield? Which is funny. You just like to talk about the order book? Well, the order book sure is an interesting topic, isn't it? Especially when you get into the math. I need to spend some more time memorizing how to derive all of these equations and stuff, so that we can talk about that, because I think the math behind it is really, really fascinating too. Yeah, seems like all he has to do is change his ad slightly and he is good to go. The order is only related to misleading marketing, not fraud. He will continue like nothing happened. Yeah. And the big thing is that everybody accuses Ross of front running, that he's trading micro stocks and then his followers buy them and he exits. And so the FTC isn't hitting him for that, although one has to wonder if there aren't other agencies that they were working with. They can hit into that '07? This sort of a thing where you can see like a big, well, I mean, that's only 1,500, but then the next two prices are still really low, is kind of an unusual situation in the treasury. Apparently, if you use his name in the day trading subreddit, it automatically deletes it. According to the complaint, the vast majority of customer accounts actually lost money, with numerous consumers losing thousands of dollars trading on top of the thousands they paid while you're trading. And this guy says, sounds like the FTC is hearing about day trading for the first time. Right. Well, really, you have to wonder who else they might be going after. Well, he's going to have to pay $3 million to the FTC. They own an LLC, so I don't know how that works out. Kind of sounds like something that could potentially bankrupt the business, though, right? So they push down further. Well, I'm not really seeing anything correlated with this. There is a decent amount of volume trading it, but it's actually this further move down. It's actually kind of balanced. So that's why you should never sell a course on trading. Well, you could sell a course on trading, just be responsible. Should I say responsible and within the rules of how you market it? Don't make promises to people, right? Like, I want to write a book. Okay. That book will contain information that you can verify, that you can go and do yourself and verify, things that are like proven facts. And of course, it will be flavored, I guess, with my experience. But the point of the book would be to point out facts relevant to your day-to-day trading that a lot of retail traders don't know, or is difficult to find all in one spot, right? I'm not going to come in and market it and say, this one book is going to be your key to financial freedom. And if I'm never going to say that. I'm just going to say, here's like some proven information that you might find helpful to your trading. I can't guarantee that it will make you successful, because that's not the way that markets work. But, I'll offer it for a reasonable price. And I think that I'll have a good product. I don't think that I ever do like a course because a course requires like constant maintenance, and that's not the business that I want to be in. So I think I would do a book, but I don't want to become like a warrior trading where, you know, I have the whole business and employees and stuff all based around my training program. I don't want to be in the business of training. I would much rather be in the business of like managing other people's money, frankly. I don't know if that's really for me or that's realistic, but that's kind of the I think where we're working towards. Well, actually, like here's the thing: if you're trading and you're a good trader, like that's the next level. Is you get so good at trading that then you go and you start a fund, right? It's really crazy to me that you get these guys that are making hundreds of thousands of dollars trading supposedly, and they're making tens of millions of dollars from their courses, and they don't start a fund with that, right? Because that's how you become a billionaire, for instance. I don't know, man. It's pretty crazy. I hope they destroy YouTubers too and give you views based on knowledge. Well, they're gonna give views based on engagement, right? And what people are looking for. We have a video on the inelastic market hypothesis, and we have a video about stylized behaviors of markets. Um, Other creators are starting to pick up on it now. They're watching me. That's the sad thing, is that there's people that will go out, watch my channel, and then go and steal my content and put it on their channel and then make more money from it. or at least more views from it, which is, but that's just the way that it is. But as that term gets, further penetration into the market and more people know about it, that video will just increase in authority, right? So play the long game, I suppose. And the most important thing is that we're attracting the people that are serious about trading and can continue to help us find edge in the markets, which I think that we do very effectively. We're in a little bit of a slow period right now, right? So it's not chat is a little bit quieter, but I'm pretty sure that in the next 2 weeks that'll pick up because the market looks like it's headed up again. And the thing is, I don't care about my track record as long as I learn how to trade. In order to do that, I need to trade more to lose more to learn more. And now remember that practice doesn't make perfect. Perfect practice makes perfect, right? I think that you know, you can do a lot of trading, and I think that there was some trading that I was doing at times that didn't really help me, you know. I don't know. It took a long time. It had to be very persistent to come in and to learn things that we could prove actually helped, because I've read so many books. It's kind of hard nowadays as I read these things and I'm like, oh, that's not true. That's not true. I know more than you do. Like, again, it's not that I'm a genius. It's that the professionals are at so much higher of a level than all of us here at the retail trading level, that if you even understand just a smidgen of what those guys at the professional level are doing, everything else that you hear the retail traders talk about sounds like nonsense. As long as you can explain why you lost. Well, but sometimes it's just random though, right? Especially when you're taking that many trades. I mean, that's the thing is, well, I think that that's an advantage to the way that we're trading, right? Is with the way that we try to trade, there should be an explanation for why you shouldn't have taken that trade or why it didn't work out, if you lose, right? Generally speaking, because it's not noise trading. With the way that the majority of this space seems to trade, it is kind of noise trading, and so they're not necessarily going to be able to explain it. Well, I mean, nothing is random, but it depends on the perspective and the decision making framework that you use to make the decision, right? So with the majority of the way that people want to trade, for instance, a signal, if you followed all of the rules and it didn't work, then that's just random. If you have 10 losers in a row, then that's just random. You would think it's almost statistically impossible that you'd get 10 losers in a row, but that actually the reality is that in a sufficiently large data set is going to happen at least once. So is it random or is it not random? Well, it's not random because I mean there's a real reason why something like that happens, but as far as you're concerned, because you can't explain any other way why that thing happened to you, it might as well be random, right? Liability like these are going to make stock courses unprofitable. They got an amazing simulator for paper trading, yet morons go live without being green in the sim first. Well, right, but that's because hardly anybody's profitable ever. Anyways. The whole shtick about the book is that you can isolate and manipulate. Well, no, it's not that. It's not that. It's that we're looking at verifiable pieces of information about the market, right? So my book is not going to be when the S&P, when we've moved down for the last X bars and this condition and this condition are set, then you buy it and it will go this way. And no, it's not going to be like that. My book is going to be like, here are all of the items that are listed in the consumer price inflation report and what the report tends to be and how it will affect different types of businesses and different instruments based on the macro fundamentals that we know, right? So this is all information that you could go to the government website and read about, but nobody does. Right? It's going to be those kinds of things. It's going to be, here are all of these relevant research studies that you should read and understand, right? It's not going to be my stuff. I read a book recently that was like the guy, a systems trader, showing you a couple of shortcuts, I guess you could say, things where he back tested a couple of different things and here are the tendencies that he's found. It was kind of funny because basically every strategy that he puts in the book is unprofitable, but I suppose it's possible that when he combines all those together in a system that he actually trades, it does make money. But I'm looking at some of them. Like one of the things that he picked up on was that on a risk reward basis, he was just like take a random entry, take a random entry and then have this certain risk reward for it, right? And his observation was that it was better to have a risk reward ratio under 1. And it was like, well, yeah, because you're doing noise trading, but you probably don't have enough samples, because if you had enough samples, then you would see that it's not actually the case. In the short term, that's the case, but in the long term, it's better for you to take the big long swings. Because those ones that ride are worth so much more, right? But my book's not going to be that. It's not going to be that. It's going to be things that I want every piece of information in there to be something that we can say we know is true, and not just, well, this is what my evidence shows, or this is my experience, or yada yada. It's a real big ask, right? It'll take a long time to write that. That'll be years. Sounds edgeless? Well, I think one of the things that's interesting about this kind of information is that most retail traders they see this information and that is what they think. They think, well, like they read these research studies and they're like, well, yeah, the Almgren Chris algorithm, that sounds like something that would be really useful if you're trading this absolutely huge trade, this huge meta order. But for me as a retail trader, why is it pertinent, right? And most people don't ever take it further than that. But I think that the one thing that I'm really good at, that I think where I bring a lot of value to this space, is that I have the ability to look at all of these very, very different pieces of information in there and am able to bring them together and show the relationships between them to make them relevant to you, right? Retail's gonna retail. But prop firms, what depends on what you mean by a prop firm. It seems to me that Axia has a couple of really good traders, and that on net that they probably make money. But you know, even with them, there's things that I hear them say that seem like they don't have as deep of an understanding of it as you would think. What's this? I don't really know much about them. Now, if you're talking, if your definition of a prop firm is, top step trader, then no, they don't. They don't have an edge. Well, they have an edge on their customers, but proprietary indicators. Well, there might. Listen, here's the thing. Markets are very statistically efficient. That doesn't mean that you can't find an indicator that is quote unquote predictive or has edge to it, right? It just means they're going to be really, really hard to find and they're not going to be public, right? That's what that means. So if there is any such proprietary indicator, it's probably really sophisticated. But I think that the larger thing that we know about markets, about how, the informational inefficiency side of it and everything, it really suggests that the amount of edge that you can derive purely from looking at market data, and especially looking at price, is always really limited anyways. So, like, that's kind of the problem, is like, if you have a technical edge, it's going to be hard to find a technical edge that, like, on a risk reward basis has a better than 55% win rate. If you found me something that was just looking at price and won 60% of the time with an equal risk reward ratio over 10,000 trades, I would be so incredibly impressed. Because I really, at this point, I don't think that you can do it anymore. But it could exist. But I think the reality is that the noise kind of limits how successful something like that can be. That's why it's hard to get over 55%. It's because there's too much noise in the market. And then you get these big meta orders that just matter so much more than all of that anyways, right? And so that's really why there's a limited edge to technicals. How are bros more sophisticated than you in finding entries based on the book? Well, I think that the big thing that the firms right now have is they've got machine learning on their side, right? So they can use assist tools to assist you that will, like, automatically place orders and automatically look at correlations and so forth for you. And then you just kind of tell it, okay, this is where I want to start accumulating, right? Those are kind of the things that I think that they really have on you. assuming that you understand everything that we've taught about liquidity and so forth. That and the research that they have is a lot more sophisticated. The VWAP? Well, yeah. So I think that VWAP is a little overhyped, to be honest with you. So the whole reason that Almgren Chris kind of came about, I think, was because these funds were having a hard time with the VWAP. The VWAP wasn't working very well for them. And part of that may have been retail traders watching the VWAP and trying to take advantage of it. So there are definitely some really strange statistical properties around VWAP, but I've done a bunch of trades, right? Based on crosses of the VWAP or how far away from the VWAP you are, and looking for all of these filtered situations, and my conclusion was that it didn't work very well. So that's not to say that I wouldn't pay attention to where the VWAP is, just that markets are very statistically efficient. Optimal, that's the thing that's so crazy, is that optimal execution doesn't have anything to do with the volume weighted anything, yada yada yada. Optimal execution is timing your entries so that they have minimal impact on the book, and factoring in if there is a directional bias and how much risk you want to take on. And that's optimal execution. That's it. So the whole thing about optimal execution is like markets are very statistically efficient, and there's a lot of randomness to it, right? But it also kind of creates certain patterns that in some situations we do appear to have an ability to sniff out. So you get these large meta orders with legs some 45 minutes apart. We are getting a move back up here. I haven't traded it. I'm not so sure that I really see a good reason to trade today. I did say to myself at one point, well, if we go short, we'll go at 2.9. But I've just kind of been ignoring it, so I don't know. Well, we'll wait and we'll see after the S&P 500 opens. And on that note, well, since we had such a big overnight move, I don't think that I want to just buy the S&P 500 here. So I'm just going to kind of sit on my hands. Are there any firms that use machine learning on the book? I think that probably almost all of them are using it. But Renaissance Capital, from what I've seen, machine learning is probably a significant factor behind Renaissance Capitals, or whatever their name is. It's probably a really big part of Renaissance's success is machine learning. Yeah. Yeah, I really don't think retail traders. VWAP sounds like a web used by a dominatrix. I really don't think that retail traders realize the renaissance that we are experiencing both in the financial industry and worldwide related to machine learning networks. Like there was machine learning before, but now we've got these machine learning. It really has started with Google. You realize that the Google search algorithm is really a classic application of machine learning. What you're doing is you're saying, here's a website, and here are all of the websites that link to it. So that means that it has this coefficient. But in order to know how that affects this website's ranking, we have to know the ranking of everything else. So what do? They do differential calculus, essentially, linear differential equations. So you get this matrix that's like a billion rows by a billion columns or whatever for every website that's being ranked for that term. And then they do the calculus and it determines what the rank of everything is. And this is kind of the basis of these machine learning kind of systems, right? These neural networks are all kind of variations of that. So it really started with the Google algorithm, and then as time has gone on and the hardware has become more available and stuff, they're just using machine learning in everything: social media, finance, traffic control, etc. And what you're starting to see now is that we can have high speed, high latency wireless connections and everything with 5G. So then that extends it even further. So now what they're going to be doing is they're going to be doing research on these machine learning algorithms with all of these Internet of Things devices is kind of the next step, right? But this is all the renaissance that we're experiencing in our world right now is machine learning. And I will make a prediction about what the next step will be. The next step will be quantum computers. What happens after that, I don't know. But I'm going to guess that the stock market is only going to become more and more like that finding edge in the stock market is only going to become more and more mathematical. Which is kind of good for us because, a lot of these people that are retail traders, they're retail traders because they didn't like that sort of stuff, This is the sad reality of it is that if you were into math, you went into engineering and you don't feel like you have time for day trading. And if you did get into the markets, you made the transition over to a company. And that's where you get people like Jean-Philippe Bouchot, because they were all physicists. Retail traders blamed for market volatility? If we really do see a bubble up in the market for the next 2 weeks, I think that the retail segment is probably going to have to play a significant part of it. Do you think it's easy for a machine to use the book? Well, I think that writing a good um, market making algorithm is quite sophisticated. That was a little bit of a weird sweep back down that we just had there. So I'm still kind of in this space that I don't have a real key fundamental driver for the treasuries here. I thought that maybe they were going to continue the move up, but that's not what we saw. And I am seeing in spots where it moves quite quickly, and not on any correlations. So that is not really a very good recipe for us to trade, right? That's kind of like we need to pay attention because that could give us an opportunity to trade. But at the moment, I don't think that I want to get in on that. S&P 500 is opening. It does look like a long. I will try a single contract here. I'll probably I'll do another one at the open if they give it to me. I wish I need to make something that makes a ding when the market opens. Yeah. Anyways, if you take that book, the Trades, Quotes, and Prices book, just about every mathematical model that they share in that book could probably factor into your automated trading market making algorithm, right? So I think that what makes something like that so difficult is that there's like a bunch of different pieces that you can combine together. So yeah, it's very, very sophisticated. And from what I've seen, the machine learning side of it is really actually still quite immature, right? There's only like two real serious books out there about it, and the applications of it are limited, and people are going through and doing studies of their own and publishing them all the time, showing the efficacy of certain models and features and so forth. So but the other part of that is that like how do you convert the book into a feature that the machine learning algorithm can use effectively, right? There's different ways to do it. So for instance, one way of doing it might be just looking at the spread. Like if I'm doing a stock, what is the spread between the best bid and best offer? That matters. That's then you could turn that into a feature column, and the algorithm could, the machine learning algorithm could factor that into its decision making process, right? So there's this whole thing about, do you use the raw data? Because we could pass into the machine learning network, how much is bid or offer at every price, right, into our algorithm. But that would be kind of crazy, right? So then what do? We pre-process it. We say, well, what if it was just the cumulative bids and the cumulative offers, or how much, stacked versus pulled and whatnot, right? What is there pre-processing that I can do that then when I pass that in as a feature that's more effective? Well, that can happen, but I haven't seen any kind of hard, fast rule about that sort of thing. It's just like you just have to try it. And running these machine learning algorithms is not so simple. It's not so simple. Hmm. Fines are negotiated. The FTC sued the defendant, and the defendant agreed, stipulated that the court could enter a judgment against the defendant in the reported amount, meaning that this is not only a settlement but an actual judgment in court. The practical difference is that a defendant does not concede the case when settling, whereas a judgment is officially losing the case. The settlement amount should be judged against the alleged tens of millions captured by the defendant and owed to the victims, but this amount is surely exaggerated. That said, the judgment amount is significant enough where it implies culpability. Hmm. So, I remember a bunch of people saying that something was coming down the line for Ross, that then those rumors must have all been true. But where things go from here is going to be interesting to watch, isn't it? Well, there they are. They're down at their lows again in the treasury. So even though we kind of had some evidence of a liquidity hole in '08, because this action has kind of been wishy-washy anyways, it doesn't look like it really holds all that much force. And there's a bunch of people saying, like, he does have plenty of disclaimers, though. Well, he does, but it looks like at points he made mistakes as well. I think it's funny, there's people saying, well, I found this to help me, even though it's like, yeah, but the vast majority of people using that lost money. So is it really actually helping you? Did you make money? Really, all that says is that you fell for it. The inside day, says Octave. Yeah, probably will be an inside day. I mean, even if we were to get to the upside of this thing, that's still all the way up at 119.26 That's like a huge move up. But what I'm wondering is if it's worth it. So it's giving us another opportunity now, right? So let's just put it out there. if we wanted to go short micros long the treasury, well, let's do it here. I'll try and get filled at '06. That way we can kind of say that we at least experimented with it. I don't think, maybe not. We'll do two contracts. Okay. This seems a little dangerous to me at the lower end of the range, but um, I don't have a fundamental reason to think that we would be moving down. That's just been what the trend has been. The things that I was looking at today kind of suggested to me higher. So that's why I'm interested in taking it there. And just it seems it's a little scary, right? So I won't do it on my live account. Maybe we will at some point. Maybe we'll go short somewhere above 2.9. Let's just kind of put that out there. But I don't really like the way that it's behaving today. I'm just gonna, we'll try to take a little bit out of the middle here if we can. In this thread, people in denial that they've been scammed. That's my take on that. Oh man. That's what I'm going to tweet. That's what I'm going to post there in this thread. Okay, see, this is exactly what I was worried about with taking a trade that I was like, I don't think I want to take this on my live account. This is push down to new lows quite easily. Like normally when I'm doing this, I want the liquidity to kind of be enough of a hole that they're going to get sucked back into it over and over again. This market hasn't really been showing me that. Doesn't seem like that there was ever a dramatic enough, trading to create that kind of force. It could still reverse back up, but it kind of makes the trade a little questionable. Now, at some point, they may actually dig that hole, and it may be in this 06 to 08 range, and then that could make this a really, really solid range to try and lean on. But for now, I think that it's tough to trade this. Let's see. There was a thread about it on Futures IL. Let's see what that was. What gives? Yeah. The thing that bothers me though is that after the commission receives money, they will tie it up in administration fees. And if anything, if left, it's given to the US Treasury, not to the consumers who lost money. But the Treasury Department who lost nothing in this gets money. Yeah. It's true. Oh, actually, all money paid to the commission pursuant to this order may be deposited into a fund administered by the commission or its designee to be used for consumer relief. Well, okay, so maybe people will get relief. Some of the buy side liquidity here is looking a little fishy to me all of a sudden. Oh, the S&P 500 is not buying this up here. I will we'll take it there. I'm trying to kind of work in a position in the ES here, so we did get a fill. We'll take a sequential profit if it gives it to us. I think that it may just be that the liquidity is light, very light still, but can you see how there's not really any significant bids until you get to new lows? It kind of looks like people are afraid to bid. Why was it a buy? The main thing that are you talking about ES or the treasuries? On the treasuries, the main thing that I'm looking at today for the treasury is well, I mean, not only was there a really big move yesterday and I'm looking for some mean reversion, but we've got a 20-year auction today as well. And that part of the curve has been more favorable. So that's why I'm looking for it maybe to move up today. On ES, we think that the market is so structurally short right now that without an additional news impetus, and we really don't get any significant planned news until the Federal Reserve next month. And so I'm looking for the S&P 500 to rise over the next 2 weeks. Now that could be dead wrong. I have to say, if the S&P 500 doesn't rise, it's going to be really dismal. Okay, it's going to be really ugly. Cool. So that was really good because it didn't get my average below the open, but it was still pretty darn good. Well, at the moment, the S&P 500 doesn't look so good. They just broke the ATR stop and they're heading lower. There was such a good move overnight that I don't think that we should count out that they'll have a decent downturn. In fact, they could maybe even turn back down to 44.40. But we'll see. We'll see. Don't really know what's going to happen. That one in the E-mini, I have to say, if I say, oh, I think over the next 2 weeks, they will probably rise, isn't the right way to play that really to buy longer term trades, and stocks that I think are, been hammered too hard and so on and so forth. A scalp here in the ES, scalp for me in ES is almost always a gamble to some extent, right? So the way that I try to do things doesn't seem to work very well in ES. There's other problems with it. I'm surprised that you guys aren't as interested in talking about the warrior trading thing because you've asked me about it so many times before. And finally something happens to him. Well, you know what? If I had taken that when we were talking about it, the 2.9, I would have gotten $10 and I could probably just be happy with that today, huh? Although in this kind of situation, I'm kind of wondering if they come back to the open. Do you think that I'll be right in the end and the 20-year auction is going to push us up to new highs? Oh, you know what? It's two contracts in MES on us sim trade. So let's just keep it open for fun. Yeah, I mean, I could puke it here for sure. $100 is a good puke. Make a video. I don't know what I would put in a video. I am gonna make a TikTok today about performance claims. So this is the thing that I think it's really funny. Like so often in trading and really in life, the conventional wisdom that like what you go and you hear people say on Reddit, like Reddit can be really good for some kinds of information, but there are other things where whatever they say is just always dead wrong. Okay. One of the things that I see in the retail trader space a lot is, well, you should follow a guru if they can prove that they've made money. No. So if you go and you gravitate towards the guru, the marketer out there that is showing the best proof, you're actually more likely to get scammed, because the people that are really making money and really know what they're doing know how much of a liability it is and never say anything, right? Like Futures Trader 71 is like the best example. Have you ever heard him make any kind of claim about how well he trades over the last 5 years? I'm not even sure if he's actively traded over the last 5 years or not. I think he probably has, but we don't know anything about his performance. He's never made any kind of performance claims, and he's never made any kind of claims that any of the services that he's providing now will make you profitable, right? The guys that are really smart will not make a performance claim. Period. The ones that do are either clueless or trying to scam you. So the thing that people look for actually leads them and makes it more likely for them to get scammed. You would ruin your account leaving an MES. Yeah, it would. Part of what I'm showing you guys here when I'm doing these S&P 500 trades is to show you that a large degree of the edge of which retail traders claim to obtain is based on taking on risk and not any kind of actual probable setup. So in this instance, I'm just saying over the next 2 weeks, I think because of the fundamentals, we're going to go up. But why would that lead to us moving up right now? I don't know. So it's just a gamble. And I have such a wide stop, and I'm averaging contracts with it, that if it does turn back up, I'm going to look awfully smart, right? Because if this turns back up, I'm going to make like $500. But we'll see. Doesn't look so good at the moment, does it? At the moment, it kind of looks like I'm dead wrong. I don't think that we've gotten to the point where I feel so dead wrong that I just want to get rid of it, but we could get there. We could get there very quickly, right? I think I will add, if we get to like here, I'll add, but otherwise. So with these sim trades in ES, I don't necessarily set a daily limit loss, but when I'm trading my own account, I definitely do. You watch when I'm trading my own account, and I don't really like to talk about whether it's a sim trade or a live trade. I'd prefer that everybody just assume that it's a sim trade and that there's nothing to be gained from following me. Do you get that? Like, I don't know any better way to present it, just as that I think that trying to follow somebody else, I reject the notion of a guru. That's my primary thing. I reject all gurus. What is a guru? A guru is somebody whose expertise and authority is based primarily on their past success. Because in day trading, past performance is not indicative of future results. Excuse me, I'm burping here and everything. Because in trading, past performance is not indicative of future results, there is no point in following gurus. Because you don't know if you can duplicate their performance. You don't know if they were just lucky. You don't know if they're lying to you. It's not a good approach. So instead, what I want to be is an expert. What is an expert? An expert is not somebody who's, as opposed to a guru. Again, a guru, their authority is based on their past success. An expert, their authority is based on a command of the facts, right? An expert knows the way things are, and he can prove to you that that is the way it is, right? For instance, there's liquidity hulls. If you want to learn about that, you can go and look up Walrasian, Walrasian, Walrasian auction, and there's research papers about it where they talk about how price will tend to fall into where supply and demand are at their minimum, right? You can prove that. There's a study and they go through how they did it and what their analysis was and everything, right? So what am I? I consider myself an expert. I know facts that other people don't necessarily know, right? And they're facts. They're not just like my opinions or like, well, in my experience, you do well if you do X, Y, and Z, right? You make that's why I like following you. You make me think you don't give ready rolls. Great way to chase out lazy mind. Yeah, it's true. I mean that is a part of it. It's difficult to run a YouTube channel with that kind of approach, don't you think? Because the whole point is to attract as many people as possible. But yeah, especially here on the live stream, not really interested in people that just want some system, you know? Because this is what most people, I really think that that's a large part behind why price action systems are so popular. Because price action is like, if I go and I make a strategy that says every time that we cross the 10-minute moving average, then that's just it. When it crosses, you take the trade, and that's all there is to it. It's hard and fast rule, and you could write a robot very easily that trades that, right? But when you have hard rules, people very quickly will just go and backtest it and find out that it doesn't work. Like, it's that simple, right? So if you're trying to do a marketing campaign or sell a system, those hard rule systems, they don't really work, right? And then there's the opposite side of it, which is, well, I don't have any rules. I'm telling you, find out information about the market that you can prove, and there might be some situations where you could have a really high probability of predicting what's going to happen, right? That's the opposite side of it, which is extremely difficult to test and to prove, which is why I'm not going to sit here and say, well, here's a backtest that shows that it works, or, here's how much money I've made with it. Instead, I'm just going to say, here's the evidence that this is a thing, that this is a fact. And, if you want to trade off of it, then more power to you. And if you don't, then no, right? But price action is kind of this golden zone in between that, right? Where it's not so specific that you can backtest it, It's amorphous enough that people think that it's working for them when it really isn't. Because the vast majority of these price action traders, they fail still. Isn't it really weird? And a large part of that is especially Pat's system, or Mac's system. That's Pat's is the price action trading system. Mac's, I'm calling out this one in particular just because it's the most popular, like, standardized price action system, right? The reason that they think it works is because it tells you to take a larger stop than your target. That's all there is to it. It's taking on risk, right? What am I doing here? Having a really, really wide stop? Well, maybe my target is twice as far as that, right? So then does that mean I'm really taking on significant risk? Well, listen, if you're taking more than 10 points in the S&P 500, that's a big stop, right? So if this works out, it's because of the excessive risk that I'm taking on. And I might double down too, right? That's where the profits are coming from and not necessarily any kind of technical read that I have. That's an ES. And again, a lot of that comes down to that ES is just really random. In the treasuries, it's the other way around. When I'm trading in the treasuries, I expect that my winners are going to be at least 1.5 times my losers, and that my win rate is going to be really high, above 45%. Right? And then that really shows that it really is like there's a real edge in it, right? And when I'm doing well, it's way better than that, right? The downside to this strategy is sometimes you just don't understand that market very well. Today is a day where I'm suspicious about my understanding of the market. Because, my gut, just my knee-jerk reaction was they're going to move higher, both mean reverting from yesterday and because of the 20-year auction. And so far, the move this morning has all been down, right? So what does that say? Maybe you don't understand this market very well, right? That's the disadvantage to what I do. But the disadvantage to noise trading is that eventually the statistics catch up with you and you're going to have a big drawdown. And since you don't have very much experience in dealing with the drawdowns because you have a system that wins most of the time, you're less prepared to deal with that situation, right? Well, it still looks bearish, right? Yeah. I would expect that they would get below if we're gonna have a down move here. I mean, we've already had a down move. It's pretty likely to go further than that pivot that we had before the open because of the inverse sine law, right? And the fact that we've had an open, right? So there's gonna be more volume out there. So that's why if we're gonna have a down move, I would expect it to go below 44.61. That's kind of why I was just kind of eyeballing it like, well, okay, maybe 44.50 is an okay spot. But it's gambling over there. This one in the treasury isn't so much gambling. This is one that, like, I think that there is a real edge to this trade, just not enough for me to be confident taking it on my live account at the moment. But so far, it's working out really, really well, wouldn't you say? It's pretty hard not to watch that action and say, oh, yeah, liquidity holes are a real thing that you can use in your trading. Well, they are a real thing. It's proven that they're a real thing. Can you use them in your trading? Maybe. I've been having success with it lately, at least. A thing that I like about these kinds of, this, what we know about liquidity is that it's incredibly consistent too. It's not like, like it will move higher X% of the time and these, and then when you go into X, it's like 52% of the time. You're like, wow, is that really an edge? No, this is like, it will follow these behaviors like every time. On average. I mean, on average, when I say every time, but on average, it's like, it will follow a square root law on average. But if you go and you do a data set, of X big, it always comes out that way, always. Because it is like fundamental to the way that a limit order book market works. Whether that can lead to profits for you is unproven, though, just to be very clear, right? Okay, so we're getting some existing home sales. The existing home sales was in line with expectations, but the existing home sales change was negative 2.7 versus an expected negative 4.09. So we continue to see the housing market dealing with the interest rates better than expected. Getting anything interesting on Twitters this morning? Oh, let's see here. Musk goes looking for financing for a $43 billion Twitter bid, says Walter Bloomberg. Is that just an extension of the story that we saw late yesterday from the New York Post or whatever it was? That Musk was having a hard time. A shocked Wall Street reacts to the Netflix implosion. That's interesting. Ukraine has received fighter jets from unnamed U.S. ally. It's not Poland, is it? The I bonds at 7% now. Does a risk-free bond with a 7% yield interest you? Kind of. Listen, if I bonds get to 10% or above 10%, then that's a no-brainer. Because you can only buy so much of them. Yeah, you should put as much into that as you can. Okay, so now if I had taken that trade, I think that 88, I have to be considering taking a profit in that situation, right? Actually, on this one, I will put the target at 12 there. The open. Because I'm not 100% confident that I mean, the chances that they break the high, I actually do suspect that they're going to break the high, or at least that's what I want to have happen. But I just know that the probability of them breaking the high is a lot less than the probability of them breaking the open. And since I still feel like I may not completely understand this market, I'm definitely looking for more of a range scalp than anything right here. This is like an average winner. $20 here. Didn't fill me at the open. Really? While the market was clearly surprised and disappointed with Netflix results, few were more shocked than the Wall Street analysts covering the company, considering that 31 analysts had Netflix at a buy one day before earnings, with only 3 sells, with an average price target of 500 versus the closing price of 348 before the earnings announcement. One can see why Stephanie Link couldn't wait to see let's see what those 31 sell size analysts that have a buy on it do tomorrow. Yeah, okay, so we did get filled at the open. That was an awesome trade. You know, I should have taken that on my live account, I guess, because even though I was really uncertain about my edge in this situation, it did work out and almost to a T the way that I thought it would. So maybe we're better than we think. Or maybe we know what's going on better than we think. I don't know. I think it's still wise to preserve my capital, you know? Because I've far too often where I've just made really silly mistakes, you know? I guess on that one, if I had done it at 2.9, wouldn't have let it get very much more. I only could have lost 10 on it. Still, really good trade. Yeah, Jim Cramer is just getting savaged over his call to buy. On January 3rd, he tweeted that Netflix is a buy. And Netflix is down 57% since then. Yeah, so if you ask me, I'm never going to lie to you about it, right? I would prefer that people just assume every trade that I'm taking is a sim account, right? Like, isn't that the thing? Is like you say that you're trading live and then it's actually a sim account, and that shows you're taking on way more risk than you would actually take with your own money, and that, you know, kind of undermines everything that you're saying, sort of a thing, right? But my approach is, okay, just assume that I'm trading sim then, right? Because I'm not asking you to follow my trades. I'm not asking you to believe that I'm a profitable trader. I tell you, I've lost money trading futures. Last year, I think my overall trading, not I think, I know from the taxes, my overall trading activity was positive, but not in the futures. Not in the futures, right? I'm not asking you to rely on my past success. I'm telling you to look at the empirical evidence. Why? Because we know that an individual's past performance is not indicative of future performance. So why it doesn't even matter how well they've done. It doesn't matter at all. Not indicative says it doesn't, doesn't matter. Look at empirical evidence, right? Liquidity holes. I wish I had the time and the resources to like prove liquidity holes to you, like get on the chalkboard and show you the math behind it. But just go look up the studies while raging auctions, right? And then you see there's empirical evidence backing these phenomenons. I don't know why nobody in the retail space talks about them, but they're things. Well, still not to my adding in point. And it is showing us like there's a reason why I took my profits there at the open, right? Because they haven't been able to get above that yet. You're an honest person. Well, thank you. That's exactly what we're looking for. Listen, if the FTC ever levies a fine against me, I'm going to be extremely upset because I feel like that all I ever do is try to warn people about the risks and try to be as accurate and empirical about things as possible. And meanwhile, everybody else is out there like promising people the moon. George Holtz, I that's not a name I think I've ever heard. I hope this isn't one of those, oh, I'm going to put this name out there so that you go and, oh, he's a security hacker. Oh, that sounds interesting. What about doing a video on how to set up jigs? Well, I don't know. What would I say in that video? I do have a video about like why I have my workspace set up the way that I do, but I probably need to make an update on that. Probably want to make an update on that. But most of that would just be like, here are the instruments that I watch. This is why I think that instrument is important, right? Like the 6J has a strong degree of correlation with treasuries. By the way, on that last little move up, 6J moved up as well. And the dollar kind of looks like they might be headed for piercing below 100.1. So I tell you, the next two videos that I have recorded, I have one about how to use Discord. And then I have another one that is like getting started with futures. So maybe I should include that in the getting started with futures video. Because I recorded the main bit of it, but I can record another bit that is like me on the screen showing my workspace. And there would be another fill at 12. But can you see the 10-year is actually significantly lower now this time? So we are, in fact, getting the move that we expected to see the whole time. It's just there was a much larger down move first. But anyways, after those two videos, then, we can do whatever you want. But what I was writing about was options gamma. I was making a video about the options gamma. So lots of different things that we can do from there, right? I kind of thought that after those last two videos that we were going to move largely into entertainment content, but then it was like, oh, here's actually a couple of other things that we can get into. So I do kind of want to move more towards entertainment content though. Just that stuff ends up doing so much better on YouTube. We do want to grow the channel. I'd really like to get the channel above 10,000 subscribers. I think that'd be amazing. I would love, what I wish. I wish that I could just be a full-time content creator, I think is the reality of it. There's just so many things that I want to do that, I can't do during the day. It sucks. But I definitely know what I would do with the time. When I go on vacation, I don't really take a vacation. I study for things. I know what I want to study. I know what I want to learn. So they're having a little. I mean, I'm noticing that even though we're getting continued uptrend here in the Treasury, it is a little bit more spotty than most of this trend. It's like, do you see they actually upticked at 12.5, and now they're down 2 ticks again. So part of that may just be the low liquidity, but seeing it come back like that, I don't think that we should read that as, oh, it's done, it's a reversal now, right? Could be a really tricky flow if we continue to see a move up. Because what we're expecting to see is a slow grind up. So far, that's what we've got. Okay, so the S&P 500 still has not made a push lower into the 4450 range. So I am going to take 2 here in the middle of this volume profile area. Okay, maybe only 1. I'll leave 1 right there just because that was like the VWAP. By the way, I do have financial juice on and everything, right? Yeah, okay. They're just not saying much today. That kind of looks like it just, like, as soon as I said something, the S&P 500 started going up. Isn't that a little eerie? Okay, did give me the other contract. So on this one, yeah, okay, the open is fine. I'll adjust that one if we get to that point. Okay, well, they've come back quite a bit more here. Well, if we are going to have continued uptrend, like if this is just like another pullback on a larger meta order, then here would be an okay spot to buy in the 10-year. But the way that the price that we stopped at and everything was kind of a key price point for the market maker, where the longs basically lost everything. So we would need to be seeing a large meta order buy, which we only have tepid evidence for at the moment. So I think that buying there at 10 is a little risky of a trade. Should I say risky? It's a much more speculative than I like. It's more speculative than I would normally do. Like the trade that we had going short at 2.9 was a better trade. So if I didn't take that one with my live account, why would I take this one at 2.89? $44.65 is the average true range stop in the E-mini. Anyways, that the whole thing earlier was about if you have ideas for videos, then let me know. I think at some point we could maybe get into, oh, okay, Netflix earnings were really bad. Let's make fun of that, right? But right now, that would be something that like I'd have to be putting out this morning, right? And I don't have the time to do all of that right now. But if I was a full time content creator, I think those are the kind of sorts of things that I'd be doing a lot. We could do those things on TikTok for sure. Oil is getting hammered again today. I'm starting to wonder if oil is eventually going to give us a price where like I would like to be along again. Looks like the treasury may yet float back up to the higher end of its range again. Gordon Haskett on the Twitter thing. The vibe we're getting reminds me of a guy who is looking for a fight while simultaneously asking a friend to hold me back. We're going to assume Musk is more focused on coming up with the perfect tweet than the perfect offer. If I was in M&A and I was approached to do a Twitter offer, that's not the way that I would be looking at it. The way I would be looking at it is, this is the biggest takeover in history and I want to be a part of it, and I'm going to do everything I can to make a good offer. And I'm willing to take the risk on Elon Musk on the bet that I am good enough to help him make good decisions. Just a little bit further. Having my average be right there is not necessarily right at the kind of like the inflection point. Is I always hate that. I don't see how such a powerful propaganda tool like Twitter would be allowed to be controlled by Elon. Well, there's definitely going to be forces out there that fight against it, but I don't know. So here's the thing. Right now, it does look like they're trying the hostile takeover route, or maybe make a better offer. I don't know. If that fails, and because I do think that the hostile takeover of Twitter is like a really tough. It is going to be tough to pull out. Hostile takeovers have been made more difficult, right? There's a reason you don't hear about it as much. It used to be in the 80s that was like an everyday thing. Okay, you don't hear about it as much as a reason for that. But I think that the split side of that is that if he doesn't get it, I think he'll start his own company. I think that if he doesn't get it, he will take a few machine learning engineers from Tesla and split them off into a new company and build a new service. And that new service would just destroy Twitter, I think. So there was the Donald Trump one, but they did everything wrong. It didn't seem to me like they were really serious about running a business. You know, they put somebody in place that didn't have any experience managing things. It doesn't look like they got very good engineers, and then the engineers that they did get quit already. You know, and then when they put the product out, they only had the Apple version of it. So it just kind of feels to me like a bunch of clueless people. I don't think that Elon would make those mistakes. And with all of the focus that there's been around it, yeah, if he made a competitor, it'd be a serious deal, right? You think that the plan was a Twitter competitor from the start, and this was the best way to get free press? I don't know if I agree with that. I think that the best situation for Elon Musk is that he takes over Twitter. I think he's serious about it. I think that he maybe is even being a little bit naive about how difficult to pull off that actually is. Right. A couple of the things that he's done, I think, have been a little naive. I also think that there is a lot of chatter around there that's just not really based on facts, you know? There's always a lot of mind reading out there on the internet, man. That's the cognitive bias that I just see freaking everywhere. Is that people think that they can infer what people's motives are, which you can't. You can't read people's minds, right? He says that he's serious. I think that all of his actions are consistent with being serious. And some people think that it's just a pump and dump the stock, but he's getting advice from more, people that know what they're doing. So they're going to tell him that trying to pump and dump this is just probably not going to work out very well for you, right? At the moment, I don't know. I haven't looked at Twitter today, but at the moment, it kind of looks like that Twitter may continue to fall, and that there's no chance that Elon would be able to sell his shares at a profit, right? Upgrade for $1 for 1 month. No thanks. Yeah, it's down again today. There was a really massive move down in Twitter towards the end of the day yesterday. But there was no news event attached to it that I could decipher, and it kind of looked like it was just maybe somebody stopping out. It was a little crazy. Mind readers are terrible, too afraid to just outright insult you, so they try to guess what you were thinking. Yeah, well, I mean, the mind reading thing really gets into silly territory, too, because what I see, the mind reading that I see on Reddit in particular is always like, so-and-so is a Nazi or a pedophile. It's always like the worst thing that somebody could possibly be thinking. And it's like, or maybe they're actually being honest with the world about what they're trying to do. It's just, how do you know? You can't read minds. That wasn't a higher high. Man, remember when I said, oh, maybe 2.89? But I'm not sure enough about it. It'd have to be like a real meta order. But that time, I think we really got some strong indications that that's what's going on. I think that even at 2.875, I could probably sell that and maybe still make it $10. But I've been doing a lot better by being super picky about it. So it's kind of funny when I come through and I am able to call what happens in the treasury almost tick for tick, but then I don't trade it. Everyone I don't like is literally, yeah, it's ridiculous, dude. So there was this one thread on Reddit where they were talking about why are conservatives so, concerned about the groomers thing. Why is that such a big focus? Because I don't think that it's actually a thing. Is what they were. I'm not speaking for myself. That's what the person in the thread was saying, right? And it was like, you're making the same. And then there was a threat. There was a comment in there that made r/best of, where he was saying, well, it's because it's projection. And it was like, you're making the same logical fallacy that they made this thread complaining about, right? Because the thing they were complaining about was that Republicans are inferring that Democrats are pedophiles. And so then the Democrats in turn said, well, the reason why they think that is because they're Nazis or they're or they're projecting. It's just ridiculous. And what actual like evidence is there to support any of those assertions? There's absolutely none. It's all mind reading. It's all in people's heads. And the thing that's so crazy about this stuff is that like that then becomes the worldview at which a certain group of people base all of their decision making off of. That is completely fabricated in their heads. That's crazy, right? Mind reading Elon Musk. I have a headache only at the thought. Yeah. I mean, he's a weird guy, right? Hearing him talk in a unstructured setting, you know, he's not a good talker at all. At all. He stutters a lot. He has a hard time formulating thoughts. He is somewhere on the spectrum between ADHD, severe ADHD, and autism. 100%. That's not mind reading. That is, I'm not a doctor. I can't diagnose him, but that is from watching the way that he talks. And he said that he's autistic, right? Well, you didn't get very much out of that one. I wonder, you know, this spot right here wouldn't be terrible for another trade, but the other thing that's kind of going through my head is that normally we're going to stop the stream here in 30 minutes, so it's probably a bad idea and I have to watch the kid after this too, so it's probably a bad idea to try and put a trade on right now. But it does look like we might continue to get some uptrends, so we'll see what happens. We're doing okay. We're doing okay here in the ES. It's, you know, we're back at break even, but I would like to get this spot up here. That's clearly a joke, not autistic by any. No, I don't think that it was a joke. Let's go back and look, okay? Elon Musk, autistic. Okay, psychcentral.com says Elon Musk opened up about autism. How does Elon Musk announcing he has Asperger's syndrome impact the autistic community? Oh, he doesn't have autism, he has Asperger's. Oh yeah, but it was on Saturday Night Live. So maybe it was a joke. I don't know. This article is taking it like it's serious. I'm pretty confident that he's not neurotypical, right? Obviously, anybody that's that smart and successful is probably not neurotypical, but he shows a lot of signs of like, especially the disorganized speech. Okay, so we got the crude oil inventories numbers, and it looks like they're positive, and we're seeing a pretty significant jump retracement of the earlier move in oil. S&P 500 turning down a little bit. That might just be noise. 95% of people think he's being serious. Well, I think that they think he's being serious because it seems likely from his behavior. Like, look, you can see it in me. I'm ADHD, right? I'm on medication, but you can still see how my thought patterns are not like normal people's, right? And there's two ways that I think you'll see it. One is that when I'm sitting here talking to you, I will have a tendency to just completely run with a different subject, right? Like which subjects I decide to focus on and when I decide to switch is disorganized. Sometimes you guys will try and pull me off of a subject and I'll be really stubborn and stick on it. And other times a subject is going well and I'll just completely switch off of it, right? It's because I don't have very good executive control over those things. And it's even worse on a longer term time frame, right? If keeping a consistent strategy and focusing on a particular thing doesn't happen. Like I created the indicator package. I could be on here every day telling you guys that how awesome the indicator package is. Don't get me wrong. I think it's an awesome indicator package. I'm not going to say that it's like it can bring you profits. I think that it has useful tools, but you're still going to be the one that's going to have to come up with edge, right? But tools that, I think are necessary tools, frankly, that really should come with NinjaTrader, especially the spreads. You want to be able to watch the yield curve, right? I should be talking about that every day. But it was kind of more like I put it out, I put the whole thing together, and then it just, it was like I did the thing and I was, ignored it. And I have almost, frankly, too many things. I have my cryptocurrency thing, the other thing. Like if I just, maybe if I just sat down and just made my whole shtick was the Buffett indicator for cryptocurrencies, and that's all I did was talk about that and market that, I'd probably be making enough money to live off of by now from that. Because especially when we started that was, there was a lot of interest in that. And I think that there should still be interest in it because it still continues to be incredibly useful. It's doing weird stuff right now. And you know what? Just kind of shows how weird the price action that we're seeing in Bitcoin is, right? So that's my ADHD-ness, right? My son has learned how to turn on light switches, and he's turning on the light switch out there. Hopefully he doesn't turn around and start turning on and off the light switch that controls it up in here. What's up with Bitcoin? Well, it just keeps... Well, here, you want to see a picture of it? I think I want to make a TikTok about this today, too. There's so many things I want to make TikToks about. I don't have enough time. Maybe that'll have to be next week. So that I can focus like the whole week on that. S&P 500 still looking pretty good. It's good. Okay. So here is our indicator. I'm going to, let's see here. Oh, I forget how to change it. Fit image. Always vid image to, okay, there we go. All right. So when you look at the indicator, okay, the thing that really stands out is you get these spikes, right? And these spikes tend to coincide with major market tops. I think that this one could even be considered a spike as well, right? This one is kind of a lot like this spike right here, right? This was the Mt. Gox. This was caused by Mt. Gox manipulation. They didn't shut it down, so they did it again, and then finally they shut it down, right? I think that the same thing is happening. There's manipulation. They don't do anything about it. Probably it'll come back up again. Probably it will shoot back up again if they don't handle the fraud. If they handle the fraud, this is probably going to go back down to here, right? And that will probably bring us down to here. Which would be very devastating, by the way, to get back below 20K. Just think about those numbers, like psychological numbers, okay? 40K is where a lot of the most major gambling players in the Bitcoin market have their average positions. Like Michael Saylor is basically, you get below somewhere between 30 and 40. So certainly if it's below 30K, he's hosed, right? And that's like his whole life. Like, so if Bitcoin were to come all the way back to 10K, that would be the end for him. He's probably going to jail in the end if that's what happens, right? His company is like levered AF. At what point do the banks and funds run for the hills? Never. I think it's more complicated than that. Here's the thing. If price falls enough, everyone will have to exit. I don't know if it will be everyone will have to exit, but the key is these points at which big players are hosed. Yeah, you're likely to get the 90% decline or whatever the deal is, right? But the thing that I see that it's doing that's weird is just look at this time period right here. I know it's super small. Let me see if I make it bigger, maybe. Zoom in. Okay, there we go. Do you see this really well-defined ping pong in a tight range? Never. I mean, it happened here in 2017. There was that one when the market picked back up. But that one wasn't quite as dramatic. This one, where it oscillates back and forth so much, we've never seen any of that. We've never seen that. It's really weird. It's a really weird. I mean, in this chart, it sticks out like a sore thumb, right? On my indicator chart. But when you go back and you look at Bitcoin itself, we've never really seen behavior like that. I think the only thing that I think comes close is this thing right here, right? Where they kind of dropped below a key level many times and kind of flatlined before just like washing everybody out, right? And then that was the recovery. So if we're going to compare to that's not a very good omen for Bitcoin, is it? But I mean, there's no way to really, for all we know, it's just random, right? But I think it's curious. The thing that is interesting, I guess, about Bitcoin at the moment is that equity markets over the next 2 weeks are likely to move up, right? At least short term. Maybe after the Federal Reserve meeting, it gets bad and they just plummet again. But yeah, that could see Bitcoin coming back up to the higher end of this range again, huh? Right? Totally within the realm of possibilities. So that's what I was saying about what it's doing. That's interesting. But I haven't been as religious. Here's the thing that I think is so crazy. When we first put this out, when we started the stream, we had a ton of subscribers for this. And they stayed and watched every post for years and years and years, right? Up until this point right here, because this is COVID, right? So when COVID happened, we kind of said, well, we knew that the market was a little rich and that there was a problem, right? So when COVID hit, that was kind of the catalyst that was needed to just really screw people over, right? But then we had this amazing rise, which again I attribute to Tether. I guess the overall market was kind of it is ripe for scams, but should we call it scams and speculation, right? The market was ripe for speculation, but I think that Tether had a lot to do with this, right? But anyways, when COVID hit, a lot of subscribers quit. And I don't think that it was anything that I did. It was just well, I need to cancel all my subscriptions and all of these sorts of things. So since then, there's been a lot less subscribers with it. And then, a lot of the time, especially this year, Bitcoin really hasn't done anything, has it? I mean, I know there was this thing, but like it came immediately back down. The action in Bitcoin has been really boring, and there hasn't been a whole lot to say. So I haven't been posting about it very much. But that's where I was like, yeah, but if I talked about it on TikTok a lot more and stuff like that, probably would get more subscribers, because this is the Buffett indicator for cryptocurrencies, and you can't not look at this and say, I mean, I really wish I knew how to do like an empirical study about this. I really wish somebody smarter than me took an interest in it and did some research about it, because I mean, it's impossible to not look at this chart and say spike, short-term top, spike, short-term top, spike, short-term top, spike, short-term top. It is absolutely 100% an effective indicator of how much speculative fervor there is in Bitcoin. And you can kind of use it to judge where we're at in the cycle. I'm not going to guarantee you make money off of it. I made money trading off of it. I made money from where was it? Where did I make money from? I think I made money on this to here, actually, is what it was. And then I got out. But not a whole lot of data, right? That's one of the problems, is that maybe 30 years from now, this will just be irrelevant. But for now, might be wrong to think it's in a cycle. Well, yeah, probably saying it's a cycle is probably the wrong way to think about it, right? Especially if it's being driven by Tether, right? Especially if it's being driven by Tether. And like seriously, this stuff. So again, here was like big move and it came all the way back. Big move and it came all the way back. Okay. Then we came to this one. This was the big one, right? The 2017 crash, where we got popular about it, because we were like, that's the thing, is that we introduced this indicator like right here. And I was telling people, it's going to come out. It's going to crash. Sure enough. Okay. But anyways, since that time, look at the range that it's been in, right? From here to here, as opposed to from here to here, right? It's been like much elevated. And I believe that is probably because of the stable coins. Stable coins is being used to support price. A dangerous game. I remember the 2017 crash vividly. You know what the thing that I find weird about the 2017 crash is that when it happened, I was just like, yeah, I was right. And I kind of enjoyed watching everybody, but it didn't seem, that was like, it wasn't over for me. Like we were just waiting for to go in and buy it somewhere. Like now it's looked back on as like this huge market peak sort of a thing. And it just didn't seem as significant as it does now. I don't know how to explain it better than that. At the same time that, we really came off of highs the last 2 years or whatever, but we haven't had like a full on crash yet, have we? And to some extent, I would even say that the 2017 crash maybe didn't go down as low as it probably should have. Again, stablecoin printing. I really think that if shit hits the fan with Tether, that Bitcoin would just get decimated. And I don't just mean like 90% drawdown. I mean like they maybe never recover from that, right? Maybe it never hits the fan though. Maybe Tether can continue to get away with what they're doing long enough until it basically they become in line with the law. You know, that could happen too. Or they do something and it's just a slap on the wrist, you know. We've been seeing a lot of that, where it seems like the regulators are really not motivated to come in and, like, you know, do something that would just completely destroy the cryptocurrency market. But maybe that's because they know how bad it is if the crypto market gets liquidated. I would think so. If crypto gets liquidated again, it might not come back to Hyzium. Well, think of it this way. And when have we ever had a situation where, you know, we had a pullback? Come back to the chart here. When have we ever had a situation in Bitcoin where we had a really significant pullback like that and didn't almost immediately go up to new highs? Right? This double top in the chart here is far and away the most significant example of a double top that you can see in the Bitcoin chart, right? Something's going on different. That doesn't predict that it's going to turn down, but I do kind of think that that's what will happen. I do kind of think. Sometimes I think, guys, actually, did you know? You know, I remember when I was saying, like, maybe even we could sell down here at the bottom of this range and make some money, but it was a good thing to not take that trade. It was a good thing not to take that trade. And it was a good thing to trade it as a range bound thing, because we are, like, very much having an inside day. We could still break those highs. Don't get me wrong. Like, especially if the 20-year auction is good, could break those highs, but kind of seems like a range bound day. Yeah, it's certainly a plausible scenario. Yeah, exactly. And then especially when you get, like, state-backed cryptocurrencies. Like here's the thing. When Bitcoin basically didn't increase the block size, that killed the major use case for it. So this is what I was kind of trying to get into earlier, was that from the very beginning, the founding idea of Bitcoin was don't trust, verify. And we can use this as a currency that gets away from government. Government can't control it. And it would be cheaper than the existing monetary systems like Visa, MasterCard, Swift, et cetera, that just anybody could transfer money and be their own bank, right? And then in 2017, essentially, they killed it. They killed all of that. Like, they just completely killed all of that. And you can see in my indicator the point at which that happened, where the activity in the blockchain was not as consistent or indicative of where it was going anymore, because at that point it was just any kind of fundamental driver was gone at that point. Well, I guess there's still electricity, but you have to wonder what happens in 50 years when you don't get any reward for mining anymore, right? This is going to be a problem. That's going to be a problem. And when it becomes speculative in nature, we have a problem with markets, or at least modern markets, because modern markets are very inelastic, right? So if Bitcoin has a decline, if Michael Saylor has to sell, it's going to be Armageddon in the cryptocurrency markets, right? But the reason I was getting into this was saying, well, it seems like the regulators kind of don't want to touch it, maybe because they know how bad it would be. Can you imagine? Like, a lot of millennials have money, are investing in Bitcoin instead of traditional investments. So you're literally talking about a situation where an entire generation's wealth could just get wiped out if cryptocurrency falls. Like it could be very ugly, and it could have knockoff effects onto other markets. But you know what? The S&P 500 has similar risks attached to it. It does, because the index funds have so much impact on what the markets are doing because they're so inelastic, right? What happens if we get to a point where, people are too old and the amount of money being withdrawn from index funds is greater than the amount of money being put into index funds, right? That's going to be really bad for the stock market. And because of market inelasticity, if government and Federal Reserve don't step in and do something in a situation like that, you could see like 80-90% declines in stocks too. You think US Fed coin will crash Bitcoin? We'll see. I tell you what, man, when you look at, both Bitcoin and right-wing media, and they talk about stable coins, there's so much fear mongering about stable coins. And it's not like it's unjustified either, because it really depends on what the coin is like, right? If the coin is anything like the Chinese currency, then it's really, really bad. And there are some people that are pushing for things that are bad. Like there was one guy in a congressional session or something like that was basically saying we could control what people can buy with it. Like we could say you can only buy one of these things with your money, right? That's the sort of thing that would allow you to do. Well, I don't know if that would allow you, because you just make another wallet. But if you can only make one wallet and it's tied to your social security number, you see what I mean? Like the implementation details of it matter so much. If the Federal Reserve coin doesn't have security and complete freedom as much as cash is, then it's not going to work, right? People won't use it if it doesn't give you the security. Crypto from central banks is just going to be more trusted by the man. Well, yeah, and it won't have any of the issues that are preventing people from being able to use Bitcoin right now, right? Like the instability and the fees and just the slowness of it and so on and so forth. But if it's implemented well, I don't know. It's a big question, right? Because that would destroy it would really undermine the founding principle of Bitcoin, right? It would make it so that the primary use case for it, use as a digital cash, would be supplanted by a superior product. But since it's not really used for that right now, does it really matter anymore? I don't know. Is there a point at which that becomes pulled out from underneath of them that they do fall or not? I'm not sure, but you can certainly see how it's an interest. It's a key question, right? And then the other big thing is that, like, if there's a stable coin Armageddon, and then in the ensuing bear market you introduce Fedcoin, right? Then 100% everybody will be like, you know what? Like, it's cool that you can use digital cash, but the idea of a decentralized currency was dumb, and all it did was expose people to scams and take money from poor people and give it to rich people. So let's just take the one good part of it, which was that it's digital cash that anybody can use and you don't have to go through a bank, right? Yeah, it could kill Bitcoin. It could. And then I'm sure that something else would come along. But if something else comes along, let's hope that next time around that regulators are more on top of it. Because it really bothers me, the amount of fraud that we've seen in this market. It really bothers me. Seeing like Warrior Trading, I don't know. I mean, I would prefer that they prove that he's front running and he gets sued for that. But he has also made extravagant performance claims and so forth. So I'm glad to see it. I hope that it makes marketers more cautious. You're about to go? Okay. It's a good discussion. I appreciate it. Sometimes when I start talking about that Bitcoin thing, it always upsets people. But now that things have calmed down, maybe it's a better time to talk about it, huh? Well, but today on TikTok today, the thing is we got to talk about, don't follow gurus. What's the problem with the guru? Keep the problem with the guru. I mean, I know that this isn't like the strict definition of a guru, but I think that in my definition of a guru, it's such an effective description of the problem with it, right? A guru's authority is based primarily on his past experience, which may not matter anymore, and an expert's authority is based on the facts, right? What would you rather be basing your financial future on? Facts or somebody's past performance? Because I tell you what, just my experience in trading has been past performance is not indicative of future results. So I will leave you with that. What should we put on the title here today? Netflix crashes. Furu's BTFO. No. maybe I could put that in there. No. Inside Day. I'm going to give the most boring title ever. Inside Day after Netflix. Crashes. I don't know. That's the most boring title ever. Doesn't matter. As long as we can find the day. That's what matters on these, because people don't. At least with the way that we've done this, because we unlist the live replay once the stream, and it's not that many people watch it afterwards. And the people that do watch it are like watching every episode to get the order flow experience. So, but we're more interested in, hey, remember that one time when Netflix crashed? What happened that day? Yeah, we'll come back and look at it. Okay, guys, I will see you tomorrow. In the meantime, stay profitable, friends.